Good morning. How are you, future leaders of our public sectors? Are you guys okay after the party last night? All right. My name is Lungisani Bhengu, also known as the Tax Doctor SA. It's not because I give injections, but because I help people avoid the financial pain that can be caused by SARS. Okay? So that is the first part I need to clarify, because everyone, when they see doctors, they think of the injections. So don't be afraid. Today we're going to be unpacking the tax matters that have to do with you and the country that you are belonging in, right? So today we will be unpacking the 2025-2026 tax update budget speech. We'll be also looking into the things that have been very much on the news, what has been happening. We know we have version 1 budget speech, version 2, and then tomorrow we are expecting a presentation to the Parliament regarding the version 3 that we hope it will address and it will be final. Right, so I have a few slides. Thank you. Okay, so I have a few slides that you will see here. I'm hoping this face that you see on the first slide you are familiar with, because it's one of the key faces that assist us, especially when it comes to the public sector, the finance, the purse. He's the guy who holds the purse for the country, right? Okay, I'm trying to change the slide. Did I just switch it off? Okay. Right. Just like everyone, I'm going to start by sharing my career journey, who I am, where I come from, and where I am at the moment. So currently, I am the Managing Director of Impulse Accountants, which is the firm that specializes in tax and SARS matters. That's what we deal with, tax and SARS, right? So my career journey started from 2016. The ladies you see here who were just presenting from AG, these are actually my former colleagues. We did the same training together. I'm very proud of them to see them that they've elevated so much. They are audit managers. Can you please maybe give them a warm round of applause? Yeah, so as an audit or trainee auditor at AG, we get very much exposed to a lot of public sector finance matters, especially when it comes to your local municipalities, departments, SOEs, and all those structures that are within the government. So we get exposed to that. I was fortunate enough during the time when SAA was being taken by AG, I was part of that team. To try and bring back the confidence on SAA in the country, but unfortunately, as we can see, SAA is not doing so well at the moment, and we're not sure what's going to be happening anytime soon. Right, from 2016 to 2018, that was my career. 2018 to 2022, I joined the private sector, but still did the auditing side of things. So the company that I was working for, I was actually doing more of the public sector audit, external audit, and specifically being the DUT. So I did the audit for DUT for about 4 years. I was an audit manager there. And then did a little bit of Mhlatuze, and then did some consulting when it comes to Dinel SOC. So I have a little bit of exposure on municipalities, department, SOCs, and also, let me see what else I have there. It's quite a few. Right, and district municipalities as well. I didn't mention them there. 2022, that is when I started to say, okay, I've had enough of the public sector now. How about I venture to the private sector? So this is where now I entered a new space altogether, where I needed to apply my mind in terms of how can I assist the private sector in terms of the needs of the private sector. Obviously, the private sector needs more on the financial side of things, not more on the audit side, but financial, tax, and all the things that are on the private sector. It's totally different from what you see in the public sector, okay? Then 2024, that is where now I started educating about tax matters. So that is my passion. One of the things that I do is to educate, share knowledge about the latest tax update, about what is changing, what is happening in the tax world. Tax world changes now and then. So there's always changes that are happening in the tax world. So you need to keep abreast. That is one of the key elements that you need to keep yourself aware of. One of the speakers yesterday spoke about CPD hours. So that is very critical when it comes to the tax world as well. Okay? Right. This is one of my favorite quotes from Benjamin Franklin. I'm sure most of you are aware of it. So he said that in this world, nothing can be said to be certain except death and taxes, right? If you put taxes and death together on the same level, I'm sure you can already pick up how serious is tax when it comes to the financial side of things. And then if you look at it as well, on our view as the practitioners, when we practice, sometimes maybe a taxpayer receives a bill. If you judge by using that bill, you will really think that SARS is trying to achieve both of these in one go. So it's not really a friendly area that you want to put yourself in, right? Okay, so part of the slides, we'll be having a few quizzes in between, just to keep the conversation going, so that everyone can at least engage and participate in terms of sharing knowledge and seeing if everything is going according to your understanding, right? So the first question is very simple. In between, we're going to have these questions, and they're going to be very straightforward. I'm hoping everyone will try and attempt to answer, although they are easy, but I don't have much sweet as my colleagues having. They said they have finished them. So let's work with what you have, your minds, and let's hope all will go well. Right, my first question here is, who is the current Minister of Finance in South Africa? Let's pick anyone.
It's Minister Enoch Gonogwana. See.
Okay, maybe let me just rephrase my question. Who is the current finance minister in South Africa, as in today?
It's Minister Enoch Gonogwana.
Okay, I think the gentleman there wanted to say something different. It's the same. Okay. As in today, guys, before we give the answer and confirm if it's correct or not, can we move to the next slide? Okay. Second one, who is the current SARS commissioner? As in today as well. Any takers? I see a few hands this side. Petuna, I see a few hands this side.
It's B. Tom Moyane.
Oh, okay. Okay. Anyone else want to try?
No. Hello guys. Igama lami nguNeliswa Ngubane from KZN Cocta. I-answer u-A, Mr. Edward. Angisazi isibongo.
Okay. Okay, anyone else want to try?
Oh.
A. Oh, okay. Okay. Let me go back a bit. Okay, so yeah, it's correct. It's C, right? Enoch Kotongwana. Please give the gentleman a round of applause. Thank you. And then on the next one, as you guys sang, it's A. Edward? Kier's sweater, eh? It's Kier's sweater, right? It's Kier sweater. Right. Okay, thanks guys for that participation. Right, I want to start with something that is looming or something that is already there right now, the latest developments or latest news. Are you aware, guys, that on the 16th, last week Friday, it was a tax freedom day? Okay. I hear a lot of no's. Anyone who was aware? Raise of hand. Tax freedom day? No one was aware. Okay. So I'm glad there is something that you're going to learn from my presentation today. So last week on the 16th, it was Tax Freedom Day. As the name suggests, it was the first day that you as a South African taxpayer was free from contributing toward your taxes for the current calendar year. Right? Okay, let me try and maybe simplify it further. So from January to December, you are working throughout the year. But there's a portion of your income that is taken in a form of tax. Whether you are an employee or whether you are an employer, whether you run a business, you receive income through a business or through a salary, it doesn't matter. So you have to contribute every year. And the total that you contribute, if it is calculated in terms of time, how much it takes you to accumulate that whole amount in the 12 months, it's from January to the 16th of May. So from Jan to the 16th of May, you were purely working toward your tax obligation. So you were accumulating the tax for the whole 12 months. So from the 16th of May, that is when you started making money for yourself. But before that, you were making money for the government. Okay? So that is the reality. We, as a country, are contributing about 4.5 months of our time to government towards taxes. So that is what basically we are facing in the country. It's a heavy tax burden if you look at the time that you're spending at work and how much you're actually contributing toward the government. Whether we are receiving a value for money, our services are good for this, that's another question for another day. But just know that this is how much you're contributing. A little bit of history. In 1994, this day used to be the 12th of April. Now, 5 weeks later, it has moved to the 16th of May. That means we are spending more time contributing towards government. Right, you can do your own research after this presentation on this if you're interested in knowing more. SARS Project Billions. Are you guys aware of this campaign that SARS is running at the moment? By a show of hands, who is aware of this project called Billions? Okay, right, I'm glad you're gonna learn this from me as well. So SARS has actually started a campaign, which is one of the campaigns they are trying to collect 70 billion rands from taxpayers to, bridge the gap. You remember there was that VAT cancellation that was first 2% and 1%, then now we are sitting at, we don't know where we are sitting until tomorrow. So they are trying to collect this. So they've actually hired a few more officials, 2,000 more, to actually assist with fueling this campaign. So if your taxes are not in order, please consider this as one of your key matters that you need to address personally, and try and fix them as much as you can or as soon as you can before SARS actually start contacting you. Right, so that is, those are the two things I wanted to cover before we get to the actual content. Right, the first thing I want us to discuss is South Africa's tax revenue. I want us to look at how much was actually received in 2024 and how much is projected in 2025, 26. VAT changes, we're going to look into that. We're going to look at the timeline, what has happened between the budget speech, the first one, V1, V2, V3. We're going to look at the key points as well on VAT. There was additional revenue that was required from that initial adjustment. And then from the scratching as well, or scrapping of the VAT, there were implications that were there. VAT zero rating, I'm not sure if that is still going to be sitting tomorrow's budget speech. We are yet to see that, but as it stands, there were a few items that were added as well as part of the bucket list for zero-rated items. Then what we noted as well in this year's budget speech, there were a lot of no changes on some key areas in the legislation. I'm not sure if you guys noticed that, but a no change in the VAT legislation can be either good or bad. And in this case, most of the things that were not changed in the budget speech were not resulting in a good tax burden side of things for you as a taxpayer. Right, so we're going to look into that in detail. And then we're going to zoom in now into each specific item, depending on the time that we will have allocated. But we're just going to look into it on a very high level. Q&A session at the end. Right. 2024-2025, the collection was 1.85 trillion rand, right? Which was a little bit less than what was originally forecasted, but was good compared to the previous year, which is 2024. And then the projected revenue for 2025-2026 is actually 2,006, which means it has increased 260 billion from the one that was projected in 2024-2025, right? So if you look at it, this 160 billion needs to be recovered or collected from someone. Someone needs to contribute, or some entities need to contribute to this 160 billion extra. And those were the plans around that VAT adjustment that was made. Unfortunately, now it's no longer valid, so we will only see how these plans of collecting this additional 160 billion will be unpacked in tomorrow's budget speech. Right? Okay, back to the quiz questions. So as I did indicate before, my questions are around the current time as I'm sitting or standing here in front of you as you are sitting there. I see a hand already up there. So there's been a little bit of confusion here. I'm hoping some of you will make mistakes so that we learn from them. So what is the current VAT rate effective from May 2025?
Sanbanani OA 15.
15?
Yes, 15%. Because I knew because Bexuiz knew of 15.5, but Isa clearly 15 May 2025.
Okay. Okay. I see a hand there. Oh, you're not raising your hand. Does anyone have a different answer from this? 15%? Okay, all right. I guess it is 15% then. Right. Okay, let's look at the timelines. Just on a high level, I'm sure you guys are aware of this. You are in the public sector. So from the first budget, 19 February 2025, there was a cancellation of the budget speech was actually postponed to 12th of March. And then from there was a second budget where it was proposed that there will be an adjustment to VAT. The original one was 2%, and now the second one was 1%, which was spread into 2 times. The first half, 0.5, was effective from May. The second half was effective from April, right? Then post that, there were challenges as well. GNU staff issues that were happening in Parliament resulted in the Minister of Finance actually cancelling or scrapping that 0.5 VAT adjustment. Now we are sitting at an unknown VAT because we don't know what's going to happen tomorrow. So as it stands, since it was scrapped, we are applying the old rate, which is 15%, as it was said by our lady there. Key points I want us to learn from this or consider from this. The initial 0.5 increase, the aim was to raise 28 billion in 2025, 2026, and then 14.5 billion in 2026 and 27, right? That was the plan on the second budget speech. Then with the scrapping that happened after that, it leaves us with that 75 billion gap or shortfall that need to be collected somewhere. Remember the project Ama Billions? That is the project that is aiming to collect 70 billion in order to bridge this shortfall. So SARS is really aggressive when it comes to collections because they have a mandate from government to bridge this budget shortfall, right? So with the VAT zero-rated items, based on the current budget speech, there were 21 essential items that were added on the list. As you can, if you go on their website, there's a list of those additional items. So the aim was that since we are increasing the VAT by those percentages, now we can compensate that by adjusting or adding more goods to the zero rating list so that we accommodate the ordinary citizens who cannot afford the expensive VAT hike that is happening. So that was the plan around it. Whether this will continue tomorrow or not, I suggest we all watch the budget speech so that we can see if there are any developments in this. Right? Okay. There are some key takeaways that we can take as well from what has happened. So it's a very interesting time in the history of South Africa that VAT has been challenged in this manner. So if you look at the Act, Section 7.4 of the VAT Act, it actually allows the Minister of Finance to approve or make an adjustment on the VAT increase at any point in time. It's his discretion to do that. However, as we saw, there were a lot of challenges around the GNU, challenging the VAT increase and taking it to court, constitutional court, saying it's unconstitutional to increase the VAT in this manner. So we've learned a lot from this, that even the act itself can be challenged by the Constitution, which is very interesting. We've never seen this in the past. So it's a lesson from ourselves, and we can also see that our judiciary system and the Parliament are actually working. I think that's a positive side that we can take, that our judiciary and Parliament are actually working when it comes to challenging this kind of situation, especially when it comes to adjusting VAT or any tax type for that matter, that can affect the consumer or the taxpayer, right? And then if you look at what we could have learned from this as well is that standard timing rules. So VAT says that it's the earlier of the invoice date or the receipt of payment. So as we would have seen that during that VAT mystery that was happening, there were a lot of confusion, and when we were receiving invoices and announcements that your bill will be increased by 15, or it will be, your VAT will be adjusted to 15.5% in the following month. I'm sure all of us received those communications from our suppliers, our bankers, whoever was sending it. But there was that announcement. When was that actually payable, or when did you become accountable for that? Was it before the invoice was issued, or was it the earlier of the payment? So rental agreements, we saw that when they were charging for May, they were including the VAT adjustment. So the timing around, as a tax or as an accountant or as a public finance person, you need to understand the timing of the VAT, how it works, and apply it accordingly when it comes to your work or daily need. Right? So we picked up that there were no key changes, as I did indicate, on a lot of items. One of them being your personal tax, income tax. In the brackets, there were no changes. Corporate taxes, no changes there. Trust and estate, there were no changes. Fuel levies, unchanged. Transfer duties, those are the ones that increased. Sin taxes, alcohol and cigarette, those ones always get adjusted every year. I don't know why, but they always get an adjustment. But it's fine. SARS is also focusing on a lot of operations. Improvement when it comes to their systems. They are very much into AI. One of our speakers yesterday spoke about the AI, and there was a question around how is AI going to be impacting us in the environment, and tax is no exclusion from this. SARS is really investing a lot when it comes to AI and making sure that they collect as much as they can. Right, the next quiz, before we go into detail of the actual changes, I'm going to go on a very high level on them as well. So this is the next quiz. What is the highest marginal tax rate for individuals in South Africa? It's getting easier and easier, ne? The questions are getting easier and easier. I'm seeing less hands. Okay, there's few hands now.
I think it's 45%.
45%. Okay, anyone else want to try?
I think I'll agree with the gentleman with 45.
45%. Any last takers? Are we speaking about this as in today, guys? Right. Okay, I guess 45%, it is the correct answer. Well done. Right. Second question is, what is the flat rate or tax rate applicable to trust, excluding special trust? Getting easier and easier. Any takers? If you know this, that means you are very smart. In the public sector.
It's 45. 45.
Okay. Okay. Who else want to try?
9, Pastor.
She wanted to try.
Yes.
Okay.
I'll also go with the lady. It's 45%.
Okay. It is 45%. Can you please give them a round of applause? You guys are very smart, eh? Okay, now I'm going to go on a very high level on the tax changes that happen. Very high level, but enough for you to at least grasp the concept of what has been happening. So tax tables for individuals haven't been changed since 2023. And this has caused something called a bracket creep, which in simpler terms, it means that since there is no adjustment to the tax tables, any increment of your salary, you may not see the effect when it comes to your take home, right? So government, by doing this bracket creep, they are aiming to collect 18 billion rand. So by not adjusting the tax tables for individuals, government is going to collect more what they could have if they adjusted these tables, which means these tables, the non-adjusting of them is costing you as a taxpayer more on your salary, right? So as I said before, the adjustments are not that good, and non-adjustment can also be not that good as well. So this non-adjustment is costing you this much, and also SARS has said that they want to collect, or they aim to collect 25.9 billion rand from individuals who have registered and have not submitted their returns. So there's about 7.5 million taxpayers who have not submitted, so they wanted to collect at least this 25 million from them. Right? Then rebate, there's been no adjustment to rebate as well since 2023, which is not good. Personal income tax, this is what I just spoke about, and a tax credit, medical rebate, no adjustment as well there. So that means as you contribute, you're not getting more adjustments in terms of any additional members that you add or anything. Right, individual taxes in 2023, this is just an example to show you how it has impacted your salary. If you look at this person, the tax paid is 113,000. So in the following years, you can see that 5% there was more tax that was paid by the individual, and then 2025. There was 13% tax, which was more than 10% what was supposed to if the tables were adjusted. 2026, instead of 15%, you get to pay 26%. This is just a high-level example, but you will actually see this in your personal payslip when you look at what is the impact of this non-tax adjustment on individuals. Right, another thing that happened last year, which was very interesting, is the two-pot saving system. I'm hoping you guys have some form of retirement. If not, this can be one of the things that you may consider as well. So last year, SARS benefited a lot from the withdrawals from the savings pot. So they collected about 12 billion in taxes for people just withdrawing their retirement on the savings pot. Can you imagine how much is that? So the more you withdraw, the more SARS benefit as well. So you need to really balance whether you really need the money, or there are other ways that you can actually utilize to get the cash that you need, right? So this is the whole story about it. I'm sure you guys are aware of how this came about. It still continues. There was that seed capital that happened last year of 10%. Not so much this year because it was a once-off element that was put in. So they benefited there. So now if you withdraw, you can only withdraw what you have left in your savings pot, right? Obviously limited to 30,000, which is a cap. Interest exemptions also unchanged. They remain at 23,000 for under 65, 34,000, and for non-resident exemptions, obviously the exemption you need to look into the physical absent test. You physically absent from SA for at least 182 days from the 12-month period before interest accrues to you. So these tables don't apply to the non-resident. They only apply if you are actually past the physical test of being in South Africa, right? Tax-free investment, we're all aware of the tax-free investment. If you want to save your money and you don't want to pay tax, this is one of the forms or one of the investment that government actually promotes, that the banks are providing you with that one type of account that you put in your money, up to 33,000, and well, it has increased now to 36,000, and the lifetime limit is 500,000. So if you invest your money there, you don't get taxed. All the taxes that you accumulate there, they don't get subject to the tax tables or tax rate that are applicable to you as an individual, right? Small business corporations, one of the speakers was speaking about small businesses yesterday. So if you look at this table, it's remained unchanged as well. This is the table that is applicable for small businesses, those who meet the requirement of a small business. Remember, ordinary business get taxed at 27%, and then small businesses get taxed at this rate. Okay. Right. Okay, so this is the table that is applicable to small businesses. So if you have a small business that earns below a turnover of $1 million a year, so this is the table that you can apply. If you make a profit of 95,000, 0%, you don't pay tax. And anything above that keeps increasing by that particular table. It's more of like a personal table for businesses. So a lot of small businesses take advantage of this. Right. There's a small announcement that the chairperson has asked me to make here, just to request a few candidates to maybe step outside for the verification. Alfred Duma. Just Alfred Duma. Please step outside for the verification. Okay, sure. Right, there is also another table for turnover tax. It has not been changed as well since 2015. This is very manual. There hasn't been a lot of changes around it. It's not popular in terms of usage, but Alfred Duma is the municipality, no? Oh, okay, thanks. I thought it was a name. All right. Okay, so yeah, it has remained unchanged since 2015. And then for the AG officials, I'm sure they will be happy about this adjustment of the travel claims. There's been a little bit of adjustment when it comes to the fixed cost fuel. Not much though, but there is a bit adjustment that you guys can benefit from as well. Other public sector institutions, I'm sure you guys travel a lot, so there's this flat rate that is applicable. If you look at it, it has, what has happened there? It has actually, was for 480, it has actually reduced to 4.76 per kilometer. So AG, I'm just going to take it back a bit. It's not really an increment. So anything else that you need to look at is that any reimbursement above this rate is fully taxable. So if your organization is paying you more than 476 rands, that difference is subject to tax. Tax-free reimbursements if recipient receives other compensation in a form of allowance or reimbursement, then a parking or toll fee from the employer. So any other reimbursement that you receive is actually subject to taxation if it's not toll-free or parking related from the employer. Okay, there's these subsistence allowances deemed expenditure. So if you're traveling in South Africa, there's a specific incidental rate that you need to apply. If your employer, maybe you go work in a specific area, maybe for half a day or so, then you are allowed to get 570 rands. Incidental cost, 160 per day, if you are actually not, or if you are in travel inside of South Africa. So the second one there is travel outside the Republic. So these are the rates. So if you travel international, these are the rates that SARS actually allows you to claim. Or if your employer pays you, they don't tax. They are not subject to tax. So these are the rates that, for those I know, most of the public sector officials, especially AG, the audit managers, they have an opportunity to travel overseas, so they can benefit from this rate. Subsistence rate for day trips, this is the one that I was referring to, which is a reimbursement in advance paid or granted by a principal for expenditure to be incurred on the receipt on the instruction of a principal. So this is for day trips only. If you're not going to be staying for longer, these are the 176 per day, which was 169 last year. So if you're going to be staying for half a day and also, this is the one that you're going to be using on your trips, right? Looking at estate duty, there were no changes as well. Up to 30 million, it's still taxed at 20%. Exceeding 30 million, 25%. So technically, this is now when you pass away, and then SARS is after your estate. They want the taxation. Any amount up to 30 million, it's subject to 20%, and then exceeding that, 25%. So there is that abatement. Anything 3.5 million and below is not subject to estate duty, but anything above that is subject to estate duty, which is not a good thing because this amount as well has not been changed since 2007. So a change in it will mean that you have more exclusion than this 3.5 here. It's deliberate, but it is currently the act that is sitting, or we need to apply. Donations tax, this is very interesting as well. Since 2018, there has been no changes. Amount exceeding 30 million, it's still 25%. Donations up to 30 million is 20%. The annual exclusion, 100,000 for individuals, and then annual exemptions per person who is other than an individual is 10,000, which means your companies and stuff. It was last amended in 2007. So, which means if you receive any form of donation that is above 100,000 rand, whether it's in a form of finance or a gift or whatever, including a girlfriend allowance and all those things, if they reach 100,000, then anything above that is subject to tax, right? Then if you're in a company or a trust or an entity, anything above 10,000 is subject to tax. Those are for donations. CGT exemptions, still last amended date were around 2012, 2016. The annual exclusion is 40,000. It's still been like this for quite some time, 300,000. The sad thing about this non-adjustment of CGTs is that specifically for you who owns a property, if your property is above 2 million, you need to pay CGT. If you sell it above 2 million, you need to pay CGT. But if this was actually adjusted over the years, if you look at from 2012, the inflation rate and stuff, if it was applied, you were going to get a larger exemption. Maybe if we're sitting today, we would be sitting maybe with 5 million rand as an annual exclusion on your property, including small businesses, 1.8 million. It affects them a lot, especially when they are trying to sell their small businesses. If you sell your business above 1.8 million, it becomes subject to CGT. So these non-adjustments are actually not very good when it comes to taxation to you as a taxpayer, but very good when it comes to collection when it comes to SARS. Right. The marginal rate, last updated in 2016 as well, 45% for individuals, 27% for companies, 45% for trust. So these have not been adjusted for quite some time, which is not good as well. Transfer duties, 10% increase on these ones. When you are now selling your property and stuff, you need to pay transfer duties as a buyer though, but as you can see here, there's been an increase of 10% on all the values that are applicable, right? Tax incentives, I just want to speak to the energy savings incentive, which was extended to 2030. It was meant to sunset in 2025, which was this year, so now it has extended to 2030, and if you look at the urban development zone allowance as well, it has extended to 2030, right? Specific excise duties, we spoke about the tobacco and alcohol. These are the adjustments that were made. For those who like entertainment and stuff, unfortunately, these were adjusted, but we're still going to see more on them tomorrow. What's really going to be happening? Will there be any additional changes? Will there be adjustments to this rate? We'll see tomorrow on the budget speech. Right, fuel levies, they remain unchanged as well. As you can see, these ones have not been changed. SARS interest rate, interestingly enough, if you owe SARS money, they levy an interest on that outstanding debt at 11.25%. But if you owe them money, that means you have a refund that is sitting with them. They only give you an interest of 7.25%. So, which is a bit unfair, but this is how it is. So if you owe SARS money, this is the interest, and then if they owe you money, this is 7.25% that you need to do. But let's look at the official rate of interest, which is 8.5%. So this rate means that if SARS, maybe in your books, or for those who are familiar with companies, sometimes there is a loan that is taken by directors for personal use and stuff. If SARS sees that balance there, that you've taken money as a director from the company, they will subject that to interest. They will pretty much deem it as if you've earned interest on the SARS, on that balance in your books. Then they want to tax that particular interest on those books. So you need to be careful on this. Right, and then these are my last two slides. SARS, admin and collection. SARS is very much putting a firmer hand when it comes to collections. They want to collect as much as they as they can, especially with these challenges that are happening when it comes to budget shortfall and uncertainty on how some areas will be covered. So one of the things that I'm keen to see tomorrow is whether the grant will continue to be funded, even though we have this shortfall, and what are other ways that government is looking toward considering this deficit that we are having, right? SARS admin collection. So there is tax evasion that was highlighted in the previous budget speech of 450 billion to 460. Outstanding debt payment, 300,000. So in total, SARS estimated that there is a possible collection on taxpayers of about 800 billion. So this is made up of 156 persons as well who are not registered as taxpayers despite having substantial economic activities. So SARS Project Ama Billions, this is where it comes in as part of the collection method. Right, okay, I just have a few questions for closing. Thank you very much, Petunia, there for assisting me. So, which of the following is not part of the 2025-26 budget speech update, the latest one that we are having? If you know this one, that means you were listening throughout the session. If you don't know it, that means you might have missed some of the things. Oh, there is a gentleman here and a lady there.
Hi, it's B.
Okay, it's B. Thank you for that response. Anyone else want to try?
No, I think I agree with the lady. It's B because the tax bracket should not be adjusted for personal tax. Thanks.
Okay, that is correct. B is correct. Can you please give them a round of applause? Right, okay, then we move to the next one. How much unpaid or collectible tax did SARS estimate for recovery? Okay, I hear a song this side. It's C. Okay, yeah, so SARS, that is correct. Can you please give them a round of applause? So SARS aims to collect this 800 billion from us as taxpayers. This is one of the things that I think when you're listening tomorrow, just keep in mind and see what are the plans around collecting this 800. Is this really collectible? You know, that's a question of you as a finance person need to be asking, and if it's collectible, what has been a challenge for so many years for SARS to collect this amount? Why has it been sitting on uncollected, right? Okay, that is the end of my presentation. Thank you very much for being a great audience. If you have any questions, I will definitely be available for it. Thank you.